Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, and it's April 2nd, and we just got two economic news releases. The big ones will be actually on Friday and a little bit tomorrow. But today we got the ADP employment number for the month of March. So we had ADP had 178,000 back in February. The forecast actually was back in February was like 139,000. So for the month of March, it actually upticked, had a nice uptick of 191,000. So they're basically reasoning this due to, as we've talked a lot about the extreme weathers we've been getting back in the Midwest, East Coast, that's been kind of holding numbers in the data back, primarily because people aren't going out and it's holding a lot of the data. So they're starting to feel that now things are warming up, getting a little bit better in those areas, that we could see data heating up a little bit more and maybe even beating forecasts. So be prepared about maybe seeing more good data, maybe being forecast for the next couple of months here. Last but not least, we also got factory orders for the month of February. So back in January, we had a negative pull of 0.7%. Forecast is supposed to go up to about 1.3%, and it jumped up to 1.6. So good overall numbers today, and everything. Now they don't put a lot of weight on the ADP, primarily because it seems to lag a little bit in their data, and it doesn't always correspond to what we do look at, which is presented to us by the Bureau of Labor Statistics of those job numbers, and those will be coming out this coming Friday. So, excuse me, be prepared for some volatility on Friday if those numbers, either come in high, which will be good for the stock market, bad for bonds, or if it comes in really low, which will be good for the bonds and bad for the stock market. So let's go ahead and jump over to the headline news right now. So as a result, basically the stock market's up. And there's also a couple of Fed members speaking today. I didn't put this in there, but one of them did make a comment so far this morning that he does foresee, he's not a voting member of the FOMC, but he is a Fed governor. And he kind of forecasts that the Fed will actually probably start raising rates first quarter of 2015. So, and this kind of could correspond to some of the other forecasts out there. One was by end of 2015, they figured the prime or the Fed's fund rate would be up to 3%. So prime is 3% plus Fed funds rate, so that would bring it up to 6%. So that would bring a lot of the home equity lines of credit cards, a lot of short-term rates up even further. And LIBOR has a way of going up corresponding to it as well. So if the Fed funds rate goes up, the LIBOR rate will go up, and that will affect obviously the ARMs as well. And then also in 2016 was one forecast of the going up to 4%, so another 1% over 2016. So again, these are just forecasts, but again, we'll have to kind of wait and see how it transpires. So speaking of such, let's go jump into the bond market, see what's going on with the rates. We do seem to have this trend right now developing that we are on a lower, rates are going up. We have a huge opening gap. As you can see, we're currently down about 29 basis points from where we left off yesterday. So that does indeed provide pricing for the worst. But this gap at some point will probably close up. But we do got to be careful here how much further we could go down. It looks like we are in the process of touching where we did the last time, as you could see, where we hit the 103.60, back around 103.40-ish range, and it bounced up. So maybe this might give us a nice floor of support and bring us back upwards and kind of rebound a little bit more. All right, folks, so rates did creep up a little bit today. Again, we do got some volatility this week, so we'll have to kind of wait and see if we can rebound this week or if it may take a little bit longer. But again, we could see this as a trend through 2014 where rates do start creeping up as we start seeing better economic news in the stock market, plays itself out. All right, folks, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Tomorrow, of course, we'll have the weekly jobless claims. And you guys have a great day. See you tomorrow.